Well, hello, hello, hello. It's Tyrone Jackson, the Wealthy Investor, coming at you with another hot WI Trade School video. I think you're going to really like this because I've been getting a lot of emails, and I just want to make sure that today I can answer just a little bit of what stocks I'm trading in this market, why I recommend them. And remember, just because I like them doesn't mean that you have to like them too. But I really am always looking for ways to keep my risk lower when I'm trading and investing, and my income higher. So lower risk with higher income. I can't go through all the stocks, obviously, but just a few I want to share with you, and I hope that they really benefit you and you're able to use them in your account. Okay, so anybody who's ever watched any of the Wealthy Investor videos, you know how I feel for the long term about a stock like Disney. Now, let's pull up a 5 year chart here of the Walt Disney Company. You see that 5 years ago, the shares, when I was recommending it back then, by the way, were around $32 a share. Today, they're around $98. They keep hovering between 98 and 100. Now, Disney's ticker symbol, as you can see, is DIS. And I'm just going to go through this so I can officially put it on the record as to why I like this company. And it's clearly going to go up 50% from here. It's because Disney has the company, not only they have great top line revenue on a quarterly basis and on an annual basis, I always look at the fundamentals first, right? But the other thing is they have a great story. And when I say, understanding the story of the stocks, what I'm really trying to explain to you is, if we took away all the fancy Wall Street language, how does the company make its money? Well, Disney is in the theme park business, right, which is essentially really the real estate business. They're collecting entrance fees when you get in there, all those concession stands, and that other big M when it comes to Disney is merchandising. They make billions of dollars off of just merchandising Mickey Mouse and Star Wars and the Three Little Pigs and those princess dresses. Those are major revenue streams. As you also know, Disney owns the television, the ABC television network, and a plethora of radio stations. So they derive their money from the advertising that comes in from there, as well as hotels and cruises, right? So Disney, and of course, they're in the movie vision, the motion picture business. So all the sales of their catalog, their movie catalogs, and what we call the aftermarkets, like places like Netflix and syndicated television and HBO, all generate revenue. And because the Disney catalog is so big and all that merchandising is connected to it, this stock has to go higher. Remember, top line revenue puts pressure on the stock to rise. Even though there are times when we go through volatile periods when the stock pulls back, any of you who've watched my videos on a regular, consistent basis, I always talk about retracement, right? A pullback is always followed by retracement. When we're investing, we're not really concerned with all these short term trends because this longer term trend is in play. Okay? That's in short why I like Disney so much. Another company that I really, really like for the long term is Home Depot. Now, in my approach to the market, I like stocks that are members of the Dow Jones Industrial Average first. I believe that's where most of your money should be invested in these strong companies. Now, you look here 5 years ago when I was recommending this company to all of my students, you notice that the shares was around $35, $36. Shares in a company like Home Depot just don't rise magically. There have to be fundamentals behind them. And what does that mean? Stores that are selling products. Now, I happen to like Home Depot not only because of their top line revenue, but also because of their story, right? You can't make an app that's going to allow you to paint your house, right? So while everybody else is into technology, this is really for those contractors in the real estate market who are buying all of their supplies at Home Depot all over the country and soon all over the world. So Home Depot is a steady Eddie. And I want to point out one other thing here. If you look at the upward trend in this stock, it's not enough for you to buy a stock and think it's the greatest thing. Wall Street has to like the stock too. The hedge funds, the college endowments, the mutual funds, they have to want to own the stock as well. And you'll notice strong uptrend whenever the stock pulls back, it's followed by retracement. This is one of my favorites. The other question I'm getting is, hey Tyrone, what are the hot stocks in social media? Okay, so now we're going to leave the Dow Jones Industrial Average and we're going to go to those companies that are supposedly up and coming. The first one I have to talk to you about is Twitter. This is not really a stock that you want to own. It's not a member of the Dow Jones Industrial Average. It is not a member of the S&P 500, and you can look at the stock's performance here and see that it's in a very strong downtrend. Why? Twitter has not been able to monetize itself. In other words, it cannot make money off of the service that it's providing. So it's either going to have to sell itself to another company who has some ideas on how to monetize it, or this stock is going to struggle. If they don't sell themselves, this will be a $7 stock. So those of you who like to catch the next big thing, Twitter is not one of the next big thing because the revenue is not there, excuse me, and there's no monetization model that has worked. That's why if you think you're going to buy the stock now at 15 bucks and some miracle's going to happen, good luck. That's not the way Wall Street works, and that is not the way that you want to invest for the long term. You want to invest, I've been saying this on my podcast and a bunch of other things, in stocks that are winners, not losers, because you think you can catch them. It's like trying to catch a falling knife, as they say. Facebook, on the other hand, has really proven itself to be able to monetize mobile and in a lot of other ways that they haven't even tapped yet, although Mark Zuckerberg did come out a couple of months ago and explain his long-term plan. This stock also pulled back, followed by retracement. It has some volatility, but it is worth it because of all the social media stocks. This one seems to be doing the best. This stock is clearly on its way to 150 for other reasons that I won't bore you with right now, but it's in a strong upward trend and its top line revenue quarterly and annual is growing. So the fundamentals are there, strong, solid stock. Now, the one that I like to trade a lot right now is back to the Dow Jones Industrial is Microsoft. Microsoft, not because of the revenue that's generated from their software product, but really what has brought the stock and made it very hot are their cloud services, right? And they're getting big money to store data for banks and hospitals and government institutions around the world with the cloud. There's a lot of running room from the revenue standpoint. So this is one stock that I like to trade in the Dow Jones Industrial Average and not invest in. Why? Because I can make money off of all these little ups and downs here. And the way that I do it, as you very well know, is not just by buying the stock, it's from cover call writing. Now, I like to use Microsoft for a weekly paycheck as a cover call writer. Why? Because I know I could always get a dollar premium somewhere. So if I go 30 days out on some shares, if the stock is trading at, let's say, for example, 52.13, I want to show you right here at the 52 strike. This is today. I'm getting 107. So for 1,000 shares, I'm making $1,000 just for selling the call. Now, I may use my margin and volatility trade some of the other shares, but Microsoft brings in a guaranteed $1,000 as a cover call writer. If you don't know how to write cover calls, you need to learn that because for the retail investor, meaning the non-Wall Street professional, it is the best way, hands down, of making guaranteed money off a Dow stock or any stock that has strong earnings. So sometimes when I'm written about in magazines, they say, you preach the gospel of covered calls. Well, maybe I do, but that's why my students make so much money in the stock market because during these volatile times, we know we have that guaranteed covered call income coming in. I do want to make one other point, though, about the covered call income. You know that this is known as an out of the money call. If the stock is trading at 52.13, I'm showing you just for illustration purposes that I'm selling the 52.50 out of the money strike just to show you this dollar premium here. Obviously, if we're in a bumpy market, I'm going to sell the 50 strike and take in the 269. That way, if the stock drops below 50 within the next 30 days, I actually make a profit. And that's the other reason I love covered calls because when I sell, this is known as the in the money call. I make money off of the stock's decline. And if you're not doing that in your account, it's something you should strongly, strongly consider because Microsoft is a great trade for that. And one other final thing I want to say is, when you're following my approach to wealthy investor approach, you always have to be clear about which stocks you're holding on to for the long term, like Home Depot, right? Because this stock is on its way to 150. This is not a trade. This is an investment, right? So I'm going to stand clear of cover call writing it, writing on it. Why? Because I want the stock for its longer term appreciation. Now, just to put my methodology totally to come full circle, those of you who are subscribed to this YouTube channel, you know my methodology right now. Take the money that I make from Microsoft cover call writing and I do what? And I buy more Home Depot. Therefore, the market is always giving me the money to invest. If I ever need to pull that money out of my account on a weekly or monthly basis for my call option premiums, I have the choice to do so. But I'm a huge fan of selling cover calls on, let's say, Microsoft, because I can take that guaranteed money and it feeds my little Home Depot habit. So you see, there's always rhyme and reason to the wealthy investor approach. I'm not guessing at stocks, right? I've been trading for 20 years. I follow the same methodology. I'm willing to be disciplined, and that's what I stress at witradeschool.com. That you follow the same discipline. For those of you who are not members of witradeschool.com, if it feels right to you, start a membership. You can follow my trades on a weekly basis, and I'd be happy to answer your questions on Wednesdays like I always do. So, you can be a successful trader and an investor. Most people are very successful, have help at it, and that's why I started this service. So join me over here at WI Trade School. I think you'll really love it, and you'll learn a lot. And all of my major strategies there are there inside in a video format so that you can watch them over and over and over and get to know the language of the stock market and start to create wealth and residual income both as a trader and as an investor. Okay, that's going to do it for me right now. Leave your comments below. I'm always interested in what it is that you have to say. And that'll do it for now. Subscribe to this YouTube channel and you'll always get my next video.